All right. What's going on, family? This is Paul McMillan II. Welcome to another live session, and it's December 7th, 2021. So when we look at the news here, we can see that in the London session, the euro dollar was under some major news kind of towards the end of the London session. Moving forward into the New York session, it actually just started 9 minutes ago. Looks like the Canadian dollar is going to be under some major news at around 10. And that's just about it. What we're going to do is we're going to pay attention once again to NAS, because I'm the type of person that loves to trade NAS. So we're going to do the same normal process. So what we're going to do is we're going to actually start and mark up the 15-minute to the 4-hour time frame. So we're going to start there. So we're going to start out by going to the very beginning all the way as far as I can. So let me pause this recording until I get to that point. All right, so now we scroll back as far as we could to the beginning of price. So this is as far back as we can go. So I put my vertical line here. So now what we're going to do is we're going to actually mark up market structure off of institutional levels. So we're going to do this one. I'm going to actually make this yellow. Let's see. There we go. So then there was another liquidity point here. See another one right here as well. Probably good right here. Maybe like up here. Yeah, that's perfect. Let's put that up there. So now that we got all that marked up so far, we're going to mark up our supply demand zones based off of these horizontal lines. Let me do something real quick and be right back. Okay, so let's start drawing our demand zones, supply demand zones. So let me do this here, the golden yellow one. All right. So we marked that up. So now what we're going to do is we're going to go to the 30-minute and do the same exact process. All right. So then we're going to actually put my vertical line here. And then we're going to do the same process. We're going to start marking our market structure based off of institutional levels. So we'll do it here. So we're going to make this, see, green, up to 30-minute here. All right. So we got that. That might be good. Kind of like that. Mark it up like that. That's good. And then I should do it that way. And then maybe push it up this way. Yeah, that probably makes more sense. Maybe go all the way up to this point. And then I'm going to go ahead and draw my supply demand zones from this point down here. Change this to light green. All right. Yeah, we can do it like that. All right, so we marked up everything. So we marked up everything up until this point. So what we're going to do is we're going to go to the 1 hour, same exact process. So this is all the 1 hour here. Actually, matter of fact, well, no, this is still fine. We're still good. So we're going to mark up this here, make this red. Could do that. And then the final one up here. All right. See red. All right. So pretty much I pretty much kind of already marked up a little bit of the 1 hour already. So when I got to the 1 hour, there's only a few more to mark up. So now we're just going to go ahead to the 4 hour here. So we marked up everything from the 15-minute to the 4 hour. And so this is what we have so far at this point. So now what we're going to do is we're going to go to the 15-minute now. All right. So this is where we're at on the 15-minute. So we can see at this point that price is pretty much overbought. I really want to say, yeah, overbought. So now that we taken care of step one, we want to go to step two and figure out what is the overall trend. So we see that price trended up from all the way to this point until it became overbought. So what I see here, this is the last Harami candle that I saw here. Okay, the last Harami. So at this point, price is actually consolidating, even though on the RSI, it looks like it's trending down, but it's consolidating. So that at this point, let me change this. So at this point, I want to wait and see. I want to wait for a breakout. So I'm going to turn on the higher high and lower low strategy. All right. And this is where I'm going to mark my supply demand zones. Matter of fact, let me do something here. Yeah, I was going to leave everything the way it is. So let's go back to this. So then at this point, I'm going to mark up my supply demand zone. So I'm actually going to erase this zone here. And just put one right up here instead. Okay. And this is just going to represent our supply zone to where price was overbought. Maybe even just bring it down to here. Bring it down to here. So now I'm going to put my supply demand horizontal lines for break and retest here, because now that price is ranging, I want to see which way price is going to break and retest along with my other confluences. So this is going to be a supply zone, going to break and retest, and then it's going to be the demand zone. All right. So that way, if price break and retest down and it sells and fill all this imbalance here, then I'll sell it. But then if it decides to, break above and create an all-time high and fill all this previous imbalance that this created all the way in this area here, then I'll buy. So that's the reason why I'm going to structure it that way. So now, not lock price. So now I'm going to actually zoom in. At this point. So now, very next thing we're going to do is we'll turn this off. And so now we're going to turn on our order block indicator, because we're going to be looking for Harami candles and we're going to be looking for imbalances. So here's the last Harami candle here to where price actually actually created imbalance here. So there was the last sell candle, then price started buying up and started instantly, shooting up. And this created a lot of imbalance, and that's why you see it in this area. So for what I'm going to do at this point is I want to actually erase these zones here. All right. Since we got one up here, we got one down here. So now, when we look at, like I mentioned before, this was the most recent up move, impulsive move. It created a lot of imbalance. So the way the institutions work is that when they cause price to go up, they're putting in billions and trillions of dollars of our money into the market. And so it makes price go up so much that it creates an imbalance or insufficiency in price. So what happens is, even though they profited very heavily from this up move, but there was a lot of sell orders that were left unclosed. So it also puts them billions and trillions of dollars in the negative. So they're going to have to come down and mitigate these areas in order to put themselves back in the positive and then continue forward in whatever direction they want to go. So we see all these imbalances here. So it makes sense that it's a possibility that they may have to fill this imbalance at least 50% before buying it up, or they might continue to sell it. Now, here's another thing to keep in mind as well. When we zoom out as well, we can see also that there's a lot of imbalance that this created as well when price trended down from this zone previously. So it's a possibility that they could buy it up to create an all-time high and fill all this imbalance, and then go all the way up into the zone, create an all-time high, and then ultimately sell it down. They could do that as well. So that's a high possibility. So what we're going to do in this case is the very next thing. There we go. That's what I want to do. That's perfect. So matter of fact, let me just move it over here. There we go. So what we're going to do is we're going to go ahead and plan our trades. So the first thing I'm going to do is actually label the imbalances with horizontal lines, because these can actually be, take profit zones. Okay. So I just mark this one and that one. And then I see one up here as well. So then the next thing I'm going to do is take my risk to reward tools. Okay. So let's say price decides to sell. Okay. So then my stop loss would be right here. My entry would be here. And I would say my first take profit would be here, because price decides to go down to here. That'll give me, that'd definitely give me a bag. That's a lot. So that'd be a good first take profit. If price decides to shoot down even more, then this would be a good second take profit. So we can shoot for that. So that's good. So now, let me actually make this thinner. There we go. So when I click on it, it's going to give me the take stop loss and take profit. Let me just move this over. There we go. Now I'm going to set up my risk to reward tool for a buy. So if price decides to buy up, then I'm looking for it to smash this imbalance here. So this could be my first take profit. If it buys up and past this zone. Could make this my first take profit here. And then this one could be my second. And then I move my stop loss up to here. See entry right here, stop loss up to here. All right, now, that's how we can do that. Matter of fact, I might actually just move my second take profit up to here. I'll just move that up to here. And then this could be my first take profit here. All right. So now that we're planning our trades, so we'll know which way to go, price decides to break and retest any direction here. Then the last thing I like to do as far as planning my trades is to turn on the Dorlean EMA indicator. Now, with this indicator, the way I use it, I use it as extra confirmation on top of everything else that I've done. So the way it works with this indicator is if the yellow EMA crosses the red EMA, and it does that on top of my confluence, as far if it lines up with my market structure and it lines up with my imbalance analysis, and then the yellow EMA crosses the red EMA, the more likely that's going to be a good sniper entry for me as well. So as I could see here, I saw that the yellow EMA crossed here, and it did an instant buy up. I mean, this is insane. That was a lot of pips. So if the yellow EMA crosses, does a full cross and a break and retest this line, then it's probably a sign that's going to be a good sell, and it might hit this point and then maybe go back up. But if the yellow EMA continues to stick up and then price crosses this line, breaks and retests and goes up, then that means it's probably lining up with all my other confluence, and then it gives the indication that they're probably going to drive price to fill this imbalance and create an all-time high and then sell it. So we just have to wait and see which way it's going to go at the 9:30 bell. So the last step to me planning my trades is just to put in set my alerts for my take profit zones. So let me do this here. So this is going to be TP1. Let me see. Hold on for a minute here. $980 plus. $980 plus. Okay. And then we're going to put that here. This is 3,400 plus. This one here is going to be $1,380 plus. $2,100 plus. So now we're going to save that. So then I want to put my alarm, my alerts in. Let me pull that up. Just give me a second here. I'll pause this recording and get that done, and then I'll resume. Be right back. All right, so I'm back. So I set my alarms for all my take profit zones. Now, to be honest, I don't think that price. I mean, price could knock these take profits easily, but even if I get $200 worth of pips, even this far on a buy, or let's say price decides to sell, and I get like 200 here, that's still going to be some good money. So I'm not expecting price to even go hit these TP zones. I'm just setting them, and then just gauging, you know, and then once I hit my target, you know, my profit target, then that's it. So let's see here. I mean, that's really my goal, just to hit one of these profits and just make at least, you know, depending on my position size, just make what I want to make. But we'll see at the 9:30 bell what price is going to do, and we'll act accordingly. So I'm gonna pause this recording. Then once we get close to the 9:30 bell, then I'll resume this recording and update you guys. Be right back. All right, what's going on, guys? So it's about 9:09 a.m. So we got a little bit over 15 minutes before final bell. So we'll see which way price goes, and then we'll act accordingly. So be right back. All right, so to give you guys an update, it looks like that the yellow EMA is trying to cross the red EMA. It looks like it's kind of crossing, but it's not an official cross yet. So we have about 10 minutes into the 9:30 bell. So once we do that, we're going to kind of gauge on which way price is clearly going. If it starts to really push down hard, then I'm just going to go ahead and sell it. I already got my stop loss and take profit put in. So we'll see what happens at the 9:30 bell. Be right back. All right, so we have about 5 to 6 minutes left to the final bell. So let's get ready to put our seatbelts on and see what happens. We see that there is a sell signal here, so they probably might drop it, maybe to mitigate at least 50% in this area. So we'll see what happens. Be right back. All right, so as you can see, my alarm went off. So the 9:30 bell has started. Looks like price might be pushing up, but they might mitigate half of this imbalance candle and then drop it. Just gonna wait for a couple minutes, but I think it's grabbing liquidity here. They might shoot that thing up. I'm gonna just wait a couple minutes and see which way it breaks and retests. And then if it for sure goes in that direction after break and retest, we're just gonna jump in. So we'll see. I might erase this zone just so once price really start going, then I'll resume this recording and make my decision on whether I'm going to buy or sell. So be right back. Another thing to note as well is that it looks like the yellow EMA is starting to stick upward. So that might be a sign of a buy. But the next thing I want to see is a break and retest up here. But there's your white line, then I'll buy. Because other than that, price can easily go up and then sell down and be like, boom. So let's wait and see what happens. Price might be buying up, but I need to see what the next candle is going to do because I don't want to get caught in a fake out. I done made that mistake too many times. So we got 8 minutes until we figure out what the next candle is going to do. So let's wait and see. Be right back. So I noticed a big giant wick here. That means that there's a lot of weak buying pressure So price might shift and maybe it might actually sell, possibly, because price is rejecting this liquidity point, looks like up here. So I'm going to wait to see what the next candle does, but we'll see. Could be wrong. Be right back. All right, so it looks like that price is buying up. So I'm gonna go ahead and push the buy button here. So it's pushing up. So what I'm going to do is, since I'm not able to share my phone screen, I'm going to share it on the other screen once I make my profit. Let me see something here. Okay, yeah, I'm not able to do it. Right, so my goal is to get at least $15, $20 out of this trade. So we'll see what happens. So we'll see what happens here. Looks like it's going to buy up. Yeah, it's pushing up. Yep, $9. Give me at least 15 and I'm Gucci. Crepes. Now, hopefully I didn't get into the wrong trade, but it looks like price was buying up, but let me pause this recording and I'll see where I'm at. Be right back. All right, so I just profited my $16 for the day. So I hit my target, so you can see price pushing up. So what I'm going to do is I'm going to actually share my other screen here. So you can phone screen here on my other monitor. Just give me a second here. All right, so you should see my phone screen. So as you can see, I made my $16. So we did good on this trade. So then I'm going to stop this screen here. All right. So as you can see, price really stormed up. So I made my money. So far it has hit. Yeah. from this point all the way up about almost over 500 pips. So that's pretty good. We actually did pretty good on that. So let me pause this recording real quick. All right, so one more thing I'm going to do is, give me a second here. Just show you guys further proof. So let me make this a host one more time and share my phone screen here. Let me stop my screen share for this one. And so this is further proof that I caught this buy, made $16 on the smallest position. If I had traded $2 per pip or more, this could have easily been a $200 to $300 profit. So we did pretty good. So what I'm going to do is stop this screen share. Let me see. Yes. All right. Did good. Looks like price is still going up, but it looks like it's about to hit. It might go up a little bit more and be considered overbought and then go down again. So it probably might go all the way up to this point, hit more liquidity and then go down and finally fill in these imbalances that we marked up earlier. So it might go up a little bit more and then just drop and fill all these imbalances. But we did pretty good. So that's it for this session. And I'll see you next time. Take care.